Why have I decided to invest in Taylor Wimpey? Well, the short answer is I believe, based on their share price, they are offering value for money for me to invest into them. Obviously, there is a long answer, and that's what I'm going to go in today to try to explain to you why I've decided to buy this building company. Why have I decided to invest in my money into shares of this building company? If you're new to my YouTube account, I think many of you are, about 18 months ago, I decided to invest £200, no more than £200, and buy companies up to the value of £50. And when they gain £2, when they become £2 positive, I sell them and accrue the gains. And that's what I've been doing ever since. And I'm currently about 60% up in those 18 months. So it's going quite well. Maybe I've been lucky, or maybe I've just been clever. But either way, it's been going quite well. I've recently sold £50 worth of Phoenix shares and made my £2 gain. And that meant that I've got £50 in my account to spend to buy some shares. And what I like to do, I like to look at a company that's going to provide dividends. And Taylor Wimpey is a company I know, and I've bought them before, and they provided dividends. And when I've checked on the dividend status, I can tell that if I keep Taylor Wimpey shares for 6 months, let's say, I'm going to get a £1.25 dividend back anyway. So I think that's fine. Since the new UK government's come into power earlier this year, one of its pledges was to build more houses, and it reported that it wants to build 1.5 million new houses in the term of its government, so 5 years. That works out at 300,000 houses per year. And last week, the Prime Minister once again reiterated that pledge that the government plan to build 300,000 or 1.5 million houses in the time that they're in office.
And build a new Britain with 1.5 million new homes.
And for me, that's fantastic news, because it means that all the building companies that are involved in building houses will gain lots and lots of house sales, because the government are pushing house sales. And if Taylor Wimpey is just one of those companies, and even if it doesn't get all 300,000, even if it gets a tiny percentage, it's still going to be more houses than it's currently selling. And it must have a positive impact in its share price. And that's kind of the main reason why I bought those shares. Now, the second thing was, when I looked to buy these shares, what I'd noticed was that Taylor Wimpey had dropped off a cliff in the last 12 months. It'd gone right down, almost to the point where it's at its lowest point in the last 5 years. And when I see a share price go down like that, for me at least, it means that there's potential to buy it, because it is a really big company in the UK. And despite the fact that these sorts of companies do go bust, in my view, I can't see Taylor Wimpey going bust tomorrow. So I think there's really low risk in buying that share. And because it's really low down, in my mind, what that means is that when they're down, they're going to go up. And that always happens. What I also did, I looked at the other shares in the sector, other companies in the sector, and for a couple, as an example, so I looked at Persimmon, and what equally they were down. And I also looked at Bellway Homes, exactly the same graph. And what that tells me, the whole sector, the whole building sector, or the house building sector at least, is being on a downer, and it's on a low point. And if the government are true to their word, and we know that it's going to be very difficult for them to do it, but if they at least try, then there's no doubt that those building companies, Persimmon, Bellway, Taylor Wimpey, all those big companies, they are going to benefit from that house building bonanza, and they are going to make a lot of money. And if they make a lot of money, then their share price is going to go up. And that's a good reason to buy these shares now. And the third reason, as I've already touched on, the dividend that Taylor Wimpey provide, the dividends will come up in the spring. And if I hold on to those shares until the spring, I'm going to earn £1.50 in dividend anyway. So whatever happens, I don't think I can lose, unless the share price drops off like a lead balloon further, and they go down even further. But they seem to have plateaued. The drop seems to have eased off, not just for Taylor Wimpey, but for all of the shares. So what I did this morning, I decided to go and buy £50 worth. I bought £50 worth of shares, and now I own £50 worth of Taylor Wimpey shares. The they've dropped off by 0.5% today, but I bought them when they were quite low, so I've gained a little bit of money and they've gone up. Look, we'll have a quick look at my account online, and I can just show you where I am, what I've done with these shares and what they look like now, and just a very quick look at the rest of my account so you can see where I am. So here I am on my account, and I've got open the page where it shows me what my previous actions are with Taylor Wimpey. And as you can see there, in April 2022, last year, I bought for £51.85 and sold for £54.72 a few months later. So I made my £2 there. I bought them again in November last year, a year ago, in fact, and I sold them there at £22.78. So I've made a £2 profit there. And once again, I bought them for £48.77, and I'm hopeful that I'll make a nice little couple of pound gain and sell them again. So they've obviously done quite well for me. Taylor Wimpey is a share I know. So currently they're sitting at 48.68, which is less than 48.77. So I obviously need to make 9 more p to make up for the 24 pence tax I've had to pay. But I bought them this morning, and they're currently finished the day at 0.16 down, but I bought them before when they were much lower than that, and that's why I've gained 1/3% on them. So it must have been nearly 0.5% down, so I've gained quite a lot of that. Generally, my account looks like this. GSK, BP and Shell are doing well. I think Shell and BP are doing well because of all the crisis that's going on in Syria, or the change that's happening, and I think that's going to have an impact on the oil price, and that's why they've done well. GSK are up as well, which is quite nice. Diageo are up. Lincoln and General are down slightly. They've been on a nice big run, so I think a little bit of profit taking must have taken place there. And PHP are down 1.22. So generally, my account, when I last did my last video, my account was 321.21 or something like that, 15, and now it's 324.35. So that's £3 higher than my last video. And I always equate it to like a tide. The tide comes in, you make your gains, you sell and accrue your gains. The tide goes out, then you buy your shares where the price is low. The tide comes in, if maybe it's a high tide, you make even more gains, and the tide goes out and you sort of buy again. And I think it's a bit like that. That's how I equate it anyway. So yeah, generally I'm doing okay, and hopefully if Taylor Wimpey do well and start picking up, then that 324 will improve in price. Yes, that's where I am. Thank you very much indeed for watching. I hope this has been interesting and informative to you. And if it has, then why not give it a like? That'd be amazing. And I'm trying to develop this account. I'm trying to build this account up and obviously produce more and more videos. And if you feel like it, if you want to follow along with what I'm doing, then why not subscribe to the channel? That would be amazing if you did, and it will give me all that confidence to put some more of these videos out. Either way, thank you very much indeed for watching, and I'll see you in the next one. Cheerio.